Good morning everyone. Today I am going to give lecture on project management and entrepreneurship. Before starting this lecture, I just wanted to tell about project. That what is project? Project, it could be any idea on which we work. Like working in a laboratory, is it a project? Yes, definitely it is a project. Why and how? Because it has one objective or aim. There will be some protocol like material and methods, and then we do some procedure and we get result. So we can define it as a project is a type of assignment that involves research or design that is carefully planned to achieve a specific objective. In other words, we can say that it is a set of interrelated tasks to be executed over a period and within certain cost and other limitations. These are some projects, examples of projects like residential society construction, building a factory, software development, and designing a new product. So what is entrepreneurship? It is the ability and readiness to develop, organize and run a business enterprise in order to make a profit. For example, starting of new business. In economics, entrepreneurship is defined as the activity of setting up a business, taking on financial risk in the hope of profit. So what is project management? It is the application of knowledge, skills, tools and techniques for some project activities that are requirement of any project. In other words, it is a planning, organization and execution of tasks for a brilliant idea to get a tangible product, service or deliverable. These are characteristics of a project. It will be a start or end point. Second, it will create something new. Third is it will start with an idea, and fourth is it is not business as usual. It means it will apply on a set of steps that will be followed the same way to get the same result. So objectives: single entity, lifespan, requirement of funds, life cycle, team spirit, risk and uncertainty, directions, uniqueness, flexibility, subcontracting and cost are characteristics of any project. These are key features of project management like task management, time tracking, project scheduling, communication and reporting. Coming to the topic task management, what is it? It is a task checklist for creating task list. In this, we can make some notes that will be beneficial for you as well as other people. On any aspect of the project, it's essential to leave a comment or suggestion so that the other person can understand and work accordingly. Examine or details for every assignment. For simpler tracking, assign some assignments like meta tags or keywords. Next is time tracking. It's basically time management. It helps project managers to meet deadlines for complex projects. For example, project management software includes features that allow them to monitor how much time is spent on tasks, communication, emails and calls. Project scheduling. Project scheduling helps in organizing your work based on deadlines or specific dates. In this, we can plan our tasks or projects at the same time and keep track of what's happening on the other aspect. When you create a task, it gets added to your schedule automatically and you can set reminders for that. Communication. It is essential in project management. It involves sharing information, instructions, feedback, guidance with team members. Good communication helps everyone work together and stay focused on project goals. It ensures that team members know what to do and understand the project's objective. Clear communication helps to align the project goals with the client expectations. Reporting is a key part of successful project management. It gives a clear picture of how resources are being used and how well the project is progressing towards its goals. Regular reporting helps maintain quality control by tracking performance and sharing updates with the right people. Reports allow project managers to monitor progress and keep stakeholders such as managers, financiers, donors, and government officials informed. This keeps everyone on the same page that reduces the risk of conflicts and financial losses. These are some financial terms that are used in any business. That could be a small business or a big business. Assets, liabilities, net income, net worth, asset allocation, EPS, EBITDA, capital gain, compound interest, and FICO score. Assets. If the fund has been sanctioned, so the property, plant or equipment that are tangible. So if we purchase all these things from a funded money, then it will become as a assets of that particular company, and it will be shown in a balance sheet of any company, that could be a small or a big company. Liabilities. Liabilities are the owner's responsibility that are like paying tax and accounts payables and accrued expenses. Net income. It is the difference between total income and total expenses. Net worth. It is the difference between total assets and total liabilities. It indicates the financial soundness of any entity. A positive net worth indicates the condition of wealth, means the company is in profitable aspect. Asset allocation. It is an investment strategy that tries to balance the risk and reward by designing the investment portfolio to include a mix of assets in line with various factors like risk tolerance and investors' goals. EPS it stands for earning per share. It is a total earning or net income divided by the outstanding common shares. EBITDA. It's earning before interest, taxes, depreciation and amortization. It is a measure of profitability. It can be easily calculated using the company's balance sheet and income statement details. For example, one of the methods of calculating EBITDA is adding taxes, interest expense, depreciation and amortization to the net income. Capital gain. It's the gain realized when a capital asset is sold because of an increase in its value compared to its purchased price. Capital gains remain on paper and are only realized when an asset is sold. Compound interest. It occurs when the interest is earned against the deposit and the accumulated interest. For example, if we are having $100 account balance in the saving account with 2% interest per annum, the amount holder will receive or get $102 account balance in the first year, and in the second year on the $102 again it will get 2% of interest, and it will be $204 account balance. So year by year it is getting increased and getting accumulated in terms of interest, that is called compound interest. FICO score is a type of credit score presented in 3 digits. It will be within the range of 300 to 850. It informs that creditors about the possibility of a client returning the borrowed money based on their credit history. Suppose if client has borrowed some money and then it shows that if it has FICO score 300 to 850, then there is a possibility that a client will be able to return the money to the So it helps creditors to credit approval or decline decisions. These are some references from which I have taken materials. Thank you so much for listening me.